we're going to start over here, and you're going to say who you are and what you represent, and we're going to go down to the end. It's going to come back to me, and then I'm just going to start firing off questions to you guys in regards to security, strategy, scaling, speed, and more on DEXs, SEXs, and more. So yeah, let's start with you, and we'll work our way down.
Hello everyone, I'm Kordan from KryptoGO. I'm the founder and CEO of KryptoGO. KryptoGO, we provide a crypto wallet service for enterprise. That means we focus on the non-custodial wallet service. So for exchange, we can provide a Web3 wallet embedded solution. So you can just switch, you can from a centralized exchange to decentralized exchange. Based on our Web3 wallet capabilities. Thank you.
Right, thanks. Well, I'm Czhang. Me myself, I have been in the crypto space for like 8 years by now. And lately, I've been working with LBanks, and particularly being an investment committee board member for LBank Max. And what do? We invest. That's what we do. That's me. Thanks.
Right, how is everybody? My name is Ben Caselin. I'm the CMO at VALR. I'm based in Hong Kong, but we're actually focused as the largest crypto exchange in South Africa and Africa as a whole by trade volume. So, about 70% of our user base is in South Africa, and grow from there.
And last but not least, the name is Raphael. I'm the CTO of BitMEX. BitMEX was founded in 2014. We invented the perpetual swap, so we are more or less the starting base of this insane derivatives crypto travel we've seen the last years. I mean, 70% are now traded roughly in derivatives, not in spot anymore. I'm actually based in Hong Kong as well, so let's go for a coffee. Perfect. And I'm in crypto since 2018, fully 2015 I started with it. We just discussed like looking at Binance at that time, small exchange, and being interested in that. And yeah, there we go.
Oh, thanks for that. And I guess last but not least, so I'm Nenter. I'm the moderator for today. I apologize for being a little bit late here, but I'm glad I caught the panel. So I'm currently the global CEO of BitMart Exchange. We've been around for the past 7 years. Pleased to be here, and I think we're going to have a very exciting panel today with experts across the exchange side, predominantly, and also on the wallet side, right, with KryptoGO. And what our focus is today will really be about the 3 S's: scaling, speed, security, and strategy, and what's next for exchanges, especially as it relates to the AI side. So I guess maybe just kicking things off, I know because you're from the Jordans, from sort of not the exchange side but the wallet side. Maybe you can just tell us a little bit about how sort of you guys, what KryptoGO is doing in terms of embracing the AI into your daily operations.
Yeah, in KryptoGO, we use AI to comply with the regulations. For example, the KYABC, with the regulation, now we need to, before we need to send a crypto asset, we need to do the RBC simulation, we need to monitor the transaction and do the blockchain address screening, and also we will combine the KYC. That means we will know the entity behind the blockchain address. All of this, we use the AI technology to conduct the documentation verification, name screening, address screening, and then we secure the transaction all around this AI technology, and then we send the transaction to ensure the security and compliance.
Great. So, why don't we focus more, I guess, on products and infrastructure for the exchange side. I guess when you guys are sort of looking on the exchange side, when you're looking at redesigning core architecture and product offerings, How do you think about that to natively support AI trading agents, algo strategies, machine-to-machine transactions? Maybe we can start with Czhang.
Sure. I mean, AI is obviously inevitable to be aware of its existence, and above all, from what I've heard and I've been promoting to a lot of people that I work with, obviously including the exchange side, that all the programmers that really should start using AI, whether throughout their workload or be aware how the counterparty, such as a retailer client, will be using AI to adapt to their trading, which means the metabolism on the development for both internally should be way faster, because you know the other party will be using AI to do it faster as well, and you have to be you have to be much more flexible in terms of infrastructure design and be more open up to different various APIs, calling side or to the token side to make sure that it combines both. And also another thing to be aware of, online on-chain and off-chain trading to be somehow synced in between those is also very critical. LBank, as you guys probably have, or some may be aware, recently have been receiving a lot of increasing volumes. Therefore, was jammed a couple of times last couple of weeks, and that's all somehow combined with growth in terms of the users. And at the same time, they are redesigning the infrastructure just to fit the need that AI will actually need down the line in the futures. So there's a lot of stuff ongoing. Sure.
Absolutely. What about at VALR, Ben?
So it's interesting, right? If you go back a few years, there was this question, which is, what is your company doing with blockchain? And it didn't really matter if the company needed a blockchain. But companies were very eager to say that they were involved with blockchain. And I think we kind of run the same risk with AI, because there's a lot of assumptions to assume that we're doing stuff with AI. Of course, AI is everywhere and it's inevitable. But for example, at VALR, we don't offer our users kind of in-house made trading bots. We don't offer them proprietary algorithms, and we won't necessarily offer them kind of AI tools to do the trading for them. What we do is we offer a very high quality API system. And there are traders who are coming in with their AI strategies or whatever they want to do, algorithms, and that's up to them. So we put the user first. That doesn't mean we're anti-AI, right? It's all good. But there may be, and I'm not sure, I'm not strongly, it's not a strong opinion, but there might be some conflict of interest if an exchange starts to offer their users basically the tools to go and do the trading for them. Like, how do we know for sure that the code is written in favor of the users rather than in favor of the exchange, which is just trade a lot? What if the wisdom is not to trade a lot? So that's kind of the short answer. Now, of course, in addition to that, of course, on the side of compliance, we work with Chainalysis. They use AI, for onboarding, like this basic stuff. But I'm very cautious when it comes to trading.
Absolutely, these are very valid points. What about you, Raphael? I think I've been reading some updates about BitMEX in the verses. Would you like to add to that?
Yeah, I mean, not repeating, but I found that very interesting, Ben. Firstly, I totally agree. AI is everywhere, but don't overstate it right now. If we think about exchange business, it's matching the best bid and offer in the highest speed, most reliable, high security. Nothing has changed. It's a race for speed since 1995 now. Now you're giving AI as a new tool. Now I'm leaning a little bit into it again and say blockchain, crypto. Some people 10 years ago said it's just another commodity. Well, blockchain, of course not, it's a technology, but crypto, which came with it, was just another commodity. And the move of the instis we see right now in the market is confirming that. It's used as gold, it's used as a tech layer. Perfect, we use that. For an exchange itself, nothing changes. Latency, throughput, processor time, security, all that stays. Of course you need to use AI everywhere. Compliance, you get swarmed with fake AI, KYC data. In the end, the question is, and there's probably the interesting question. Are you leaning back more in the sense of we're absolutely the neutral exchange and the infrastructure provider, which definitively all exchanges should do? And on the other side, how can you give all your, especially the retail side traders, access to secure and transparent AI, which they can use for their trading strategies? I do agree with you that the AI shouldn't just benefit the exchange. It's not about creating trading bots which trade a shitload of volume but just burn through your collateral. That's, I mean, nice idea. Every exchange will say thank you, but let's remember, everybody's trading with the exchange to make profit. As soon as they realize they're not making profit, they're shutting you off. You're not interested.
Absolutely. And look, I think for, it's not necessarily even on just the, trading bot side. I think every business, if you don't have AI, whether or not it's for customer service, KYC, or any part of your business, you're going to be left behind. I feel like I feel like I'm kind of stating the obvious, but I think everyone on stage is, really understands sort of that for their respective business. I guess to me, I think what would be also more interesting for the audience is sort of your perspective on sort of where you see exchanges going over the next sort of 3 to 5 years, right? Everyone has, everyone understands that everything's a lot of per volumes moving on chain. That sort of that ratio has certainly shifted, and I think are at highs. So I'm really curious from your perspective where you see things are going from multiple different perspectives. So maybe we can start here and work our way down.
Okay. From our perspective, regulation is coming fast in stablecoin and custody. So exchange don't need to build. I think exchange don't need to build everything from scratch, especially on the on-chain application, on-chain wallet. That means it's a custodial wallet. So I think the best way is to work every local maybe tech provider and with the compliance building. So that means we can serve every kind and every digital asset which is a low listed in the local regulations. Like in Taiwan, many meme coins now allowed to list. I think it's also happen in Japan and Korea. So I think the compliance security building, and also wallet provider, maybe a new way to integrate with current exchange players. Like you don't need to OKX and Binance to build another Web3 wallet from scratch. So I think there's a new trend, and new trend is decentralized blockchain. Yeah. This one.
Gotcha. All right. So if you ask me what's next for exchanges, like what should we do? Obviously, take over the world, put Wall Street behind. We're gonna do that, right, guys? No? Well, just for real, just kidding. Before the reality is that the whole Web3 space, we are moving very closely to the traditional spaces. Whatever you guys see, all those DATs or you want to call it, or crypto project getting listed. And I think similarly, we're also helping with the exchanges here, right? I mean, I personally see a time where things split. I gave my team a time, just the night when Bitcoin ETF was approved in the US, that from now on, the world are splitting. You either go left, which is the code, aka the old crypto people who used to live, the DJs back in 1718s. You now start with new token, low evaluation back in ICO era. Not everything is like 100,000 million on day one. It's really just like a mil or two. And something what meme coin really continue to have low cap, high growth. So you either go one side that is crypto native, or you go the other side, compliance, right? So it's really, I mean, the day that started almost 2 years ago, that you had two paths. I can't speak for every exchanges, but I can only say that I see the vision of those two paths become more and more clear, and the owners of the exchange will have to decide which way they want to go. Nonetheless, whichever way I think there's profit to be made, there's revenue to be made, there's the different ways of getting there. And well, besides that, I think exchanges are still going for mass adoption, even though it's very hard for new players to come in right now. However, but the market is still growing, so there's big opportunities still for us.
Maybe there's a comment to make, which is a difference between centralized and decentralized exchange. So I'll comment mostly on centralized. Let's say if we think about cycles, so bull markets and bear markets. The traditional exchange model during the bear market, that's really like revenue dips. Revenue dips. Yeah, it's a time for building. We say that to comfort ourselves, and it's true. But I think actually what's ahead for exchanges is the opportunity to become much more robust. And how to become more robust is actually to offer expanded services. So for example, you can have your exchange offering. People can trade. They can trade meme coins or whatever it is, Bitcoin, Ethereum, okay? Through tokenization, let's say we can offer gold markets, X stocks, right? Stock markets, tokenized stock markets. Maybe at some point real estate, I'm not sure, let's see. But let's say so the markets become a bit more diverse and a bit less sensitive to bull and bear like that. And then payments and custody and staking and lending and slowly but surely you can expand that whole business model and revenue model, because a lot of these things like transactions, we're active in Africa, right? Remittances are relevant, bull and bear. They're always relevant. Cross-border transactions are always relevant. So I think that's one opportunity for exchanges, which is really to become robust through really diversifying the offering. And that's different from a decentralized exchange, because centralized exchanges are more compliant. Let's say that's the direction for centralized exchanges. They can get licenses and they can get more into that traditional economic and financial system, and therefore seize more opportunities. Decentralized exchanges will do really well during bull markets, and in bear markets will probably become very silent, like graveyards. And that's not bad, that's fine, right? They also have less staff to pay, less operational costs, etc. So I think that's worth mentioning.
Yeah, and we just talked about cycles, and maybe that's a good start. Let's remember that crypto follows TradFi, but in lightning speed. Like what takes 10 years in TradFi is a year or a year and a half in crypto. What's the biggest trend out there in TradFi right now for retail? Passive. There we go. ETFs are dominating the market in a way nobody thought 10 years ago would be that dominant. So we will see exactly a similar movement. So what we see on the exchange world is first we will see a global consolidation, because you can't have 450 or whatever crypto exchanges viably around. There will be 30 or 40 or 50 with 5 big gorillas and the rest following up and trading because of regulatory reasons or an extreme strong local market or whatever. And as Ben said, you're not chasing bull and bear all the time. I think the time is, I'm not saying the time is over that Bitcoin can go to 1 million. We firmly believe in that, but it might not be like we're jumping from 120 to 35 again, and then we jump to 250, and then we drop down to 60 or whatever. I think those phases are actually over because we have a more stable inflow now. So we will see that retail traders are actually moving into a space where they accept either they can go in a direction of, this is a new project, I have a 0 and 1. The 0 means my money is burned, but it's only 1, 2, 3, 10 million worth right now, and it maybe goes to 100, great. Or they invest in, I'm now saying nearly boring Bitcoin, can only go 10x in the next 10 years, boring. But they have like a long-term investment. So they are more looking like copy trading, which is then for, well, this trader has done very well the last 3 years, why should he now screw it up? And the exchange is standing behind him. Great. Trading bots. And AI is helping that. What AI for me, from the retail perspective, is a tool to optimize trading. It's a tool to optimize learning. It's a tool to optimize data. Right now, what AI is perfectly capable of right now is going through millions of data sets and providing a summary in a record time, which even modern algos and native keys can't do right now. But this is what will change it. I don't see, not yet, AIs in the driver's seat doing billions of transactions per milliseconds, because there will always be a failsafe, a circuit breaker. We don't want systems to trade against each other and react on indices. That's why every exchange has a 5 or 10% breaker and saying, like, guys, the market is overheating, there's something wrong. We pull the plug, we're off for 10, 20, 30 minutes, and then we pull it back and see, is the drop viable? Is that a real drop? Or do we just see trading bots going wild? So for me, I think for the retail side, AI is just another tool, making it more interesting. And I hope it keeps the balance between retail and instis. Because remember, crypto is so fascinating because it has a high volatility, and the information gap between insti and retail is sensational low. Now, if that changes, it becomes uninteresting for retail. They might search for something else, because I want to know more than the market makers, or at least as much as them. Otherwise, I'm just bleeding money.
Absolutely, and I think even going back to sort of what you were saying about the belief that this industry should be massively consolidating. You don't need 450 exchanges of all different sizes having their sort of specialty. I completely agree with that point, and I think that's something that we're starting to see right now. There's a lot of sort of these both private market and public market sort of discussions happening. I think definitely over the course of the next few years, we'll certainly see a lot less players. And look, I mean, even as when I think about AI tools from a retail trader perspective, right? If I'm using whichever platform, it's fun sometimes. I'll test it out across different sort of platforms, but ultimately, am I going to use those for a lot of my decisions, trades? Probably not. And there's some stuff that are interesting. There's certain stuff that will aggregate, sentiment, data. I mean, it's like these nice bells and whistles to have, but not necessarily sort of. It's not. I'm certainly not going to shift and move over to another exchange and use that exchange because they have some trading bot or something that's going to give achieve some kind of expected return over a certain period of time. I guess that's why I wanted to sort of shift a little bit away from the AI side and also talk about the last of the three, the speed, security, strategy, more on the strategy side, because as you guys have mentioned, it's highly competitive. I think lots of times exchanges are competing over the sort of same user base, even though everyone's trying to sort of onboard more non-Web3 users in, right? But from a and we have, for example, Raphael, you're heading up the growth side for BitMEX, and also I think being the CMO of VALR, a lot of it is really I'm just curious sort of what you guys see as one of the I guess the key initiatives when it comes to and strategies when it comes to driving growth, both on the Web3 side as well as onboarding sort of newer non-crypto native folks into your exchanges. So maybe we can start the other way around this time.
Yeah, sure. I think onboarding and in general, so let's quickly pick up the consolidation point. Actually, the funny thing is the exchanges should just sit on a table, get together, and 100 of them should just merge. That would actually make our world way easier, and I'm probably some people on that panel would directly agree. We would quickly create a way bigger exchange than before because it would make everything easy, especially for our users. Going to strategy in general, I think user generation, getting new users It depends which market you define for yourself. Like, for example, BitMEX, we're clearly on the derivatives leverage products. So we're not looking for the next spot customer because we're not focusing on spot market, or we're not looking for every project under the moon which is hoping to get the next 100 to 1000x, which, by the way, is impossible based on the validation they're anyway trying to ask after for 24 hours existence. But having that said, I think the differentiator between the exchanges is primarily the community. Same as you don't have one dominant, I don't know, car or whatever you want to take as an example. There's not only Mercedes because it had the best quality, or these days Toyota. There's not only BYD, there's not only Tesla. You have 150 others as well. Why? Because people have still their own taste. Some like the BitMEX colors better. Some like Bybit. Some like BitGet. Like whatever you like. Of course, if you look at that, you will always have like a differentiator. So for us, community is standing above them. So looking at affiliates, looking at KOLs, look into your core market. What are your traders trading? Why do they promote you? Finding ambassadors, finding multipliers. I think that's for me the main point in my main work.
Great. Ben, any thoughts on that?
Yeah, I think consolidation is first happening at the regional level. And that's of course to do with licensing, but also you can see, right? So we had the dominant exchange in India, the dominant exchange in our case, South Africa, the dominant ones in kind of in Malaysia, like almost every country. Well, I think here it's Arbit, I'm not sure, but I think in every country there's a few dominant or one dominant exchange. And that gets really, well, to use the word, that also gets consolidated. And so it's very difficult so even in South Africa, even though Binance is a very big exchange globally, in terms of volumes, we outdo Binance in South Africa. And if we go to Malaysia, for example, we're going to be outdone by another exchange. So this is very difficult. Once you have a dominant exchange, it's very difficult to oust them, in a sense. So, but I do agree on the consolidation piece, and a big global exchange can start to acquire local exchanges, for example. That's very possible. The second thing that I think we need to consider is that we're not all, like, markets are different. So for example, in South Africa, there's strong capital controls in place. And so the stablecoin market is huge. People, not just people, corporations. Most of our volumes comes from corporations that are looking for arbitrage opportunities, get out of the South African rand, get into the US dollar stablecoin market. And that's a unique market that might not apply in Taiwan or in some other country. And so another thing is that it's very difficult to get access to US equities, for example. So now, I mentioned X-Stocks already. We've recently listed X-Stocks. And so, whether it's AI in terms of like NVIDIA or Tesla or Circle or whatever, Coinbase, strategy, now our users from South Africa can get easy access to these markets. And I think that's very interesting. That's also a consolidation of sorts. Global markets become more accessible to the local markets in a sense. So, our growth is part of our growth. Depends on that access that we can give. And also very recently we became the partner of the DHL Stormers. DHL Stormers is a big South African rugby team. Similar, maybe the Springboks or whatever it is. That's a national team. And this has been very interesting. This is our way of, our branding is going to be all over the stadium. And this is not some FTX Miami Heat type of arena play. But nonetheless, sports partnerships and these types of big partnerships do allow us to enter new audiences. And, there's still a lot of awareness to be raised in the general population. Like, everybody here is kind of in the crypto space. There's more people outside, right? So it's the same in a given country. Whether it's sports or whatever it is, there's millions of people that still have that first journey to go to experience into crypto.
Absolutely. And
Yeah,
I know we're running a little short on time, but
I'll do it
please,
really fast.
let's finish.
Sure. Well, although I'm not exactly like executing the exchange side. However, I do know the general framework for strategy, which is in practice and also might be useful for the other folks here on the ground. So when it comes to entering the strategy path, the first question you should ask is, I will rank the following: who, what, how, and when. So who do you want to serve? There is a community. Which part of community? What side of community? The region, the US, the different regions. And therefore, once we know who you want to target, therefore is what. What do you want to achieve for them? What kind of product you want to build from? Whether that are more spot, perps, AI, bots, whatever, or institutions. And then the third question follows, how, whether it's merger, being combined, or other things that's being spoken right now. And then at the end is when it's time to strike. So, I mean, when it really comes to fundamental, you answer those 4 questions to come up with a strategy that is most fitted for the situation you want to set up for this year. And I can't say much for LBank because they're actually doing great, and then I have big faith on the boys doing their job. But we do follow the frameworks nonetheless.
Great. And Kordan, any final words?
I'll keep it short. I think besides the speed, user cares about the accessibility and trustability. So I think the key strategy for exchange is the mass adoption. So when more and more issuers of stablecoin across different country, different institution, so how would exchange help them to settle the crypto payment? For example, issue a credit card, help them to build another retail payment application to help them settle a different kind of stablecoin of the local currency. I think that this is a key strategy in these 2 years.
Well, thank you very much, everyone, for this amazing panel, and I'm sure there's a lot of folks that want to meet you guys after. But let's give it up for the panel here. Thank you, everyone.
Thank you.